Energy shares get bid up when oil prices rise. It's a knee-jerk reaction.
Yes.
We know that. Analysts are looking for energy earnings to plunge at least 50% in the first quarter, second quarter, and third quarter. Is that all priced in already?
I think a lot of it is, Scarlet. And I think when you look at this earnings season, it's going to be very interesting to see. We know that a lot of numbers came down because of the dollar. We know a lot of numbers came down because of the lower price of oil. But now, has that bar been reset so low that we actually get some positive upsides to earnings season? That's what I'll be looking for.
Well, and to your point, Jamie, if we can pull up a chart of the latest earnings estimates, it really shows how S&P 500 earnings are slated to fall almost 6% in the first quarter, extend that decline into the second and third quarter. But if you strip out energy earnings per share actually rises. What's the better indicator of earnings overall and the underlying economy, to include or exclude energy?
Well, I think you have to include it because it is a big part of our economy. You know, it's roughly 30% of S&P earnings come from the energy space. So we can't just ignore the fact that a lot of these big energy companies are going to get hit. But you also can't ignore the fact that while the price of oil and other commodities have come down so hard, that's really a tailwind for a lot of the other sectors of the economy. So it really becomes, I think, it's an overused expression, but a stock picker's market.
It's a stock picker's market. All right. In addition to energy, of course, which is slated to post a 63% plunge in first quarter profit, 4 other sectors are set to see their earnings drop as well. Materials, utilities, consumer staples, and financials. What's the common thread there between those different sectors?
I don't know if there really is one common thread. You know, you could look at the dollar. I think when I look at utilities, I think utilities had a nice run, and you're seeing money be allocated elsewhere. I think money will be coming out of utilities as people expect a rate hike later this year or into 2016 now. So I think that's why money's coming out of utilities. The other ones, I think financials, people are starting to, again, set the bar really low for them. And when they start announcing earnings next week, I think you're going to see quite a few upside surprises there.
Do you get the sense that we're at peak margins already? Because you've got companies like McDonald's, Walmart saying they're going to be paying their workers more. We know that wages are a huge expense for these kinds of companies. Have we reached peak margins, peak profitability?
I don't think we're anywhere near it because several reasons. Number one is technology. You know, a lot of these companies are able to do a lot more with a lot less right now. So companies can be more profitable. And really, when you look at the dollar and the effect it's had on the markets, I think some of that could be, we may have overshot to the downside on how negative things are going to be. So I think we're far from that. I'm a lot more bullish. I think there's a lot more upside there.